Hi everyone. The Dow crashed 4,000 points in 2 single days. The S&P crashed 10% in the last 2 days. And guess what? The Nasdaq has actually fallen into a bear market territory, meaning that we're in a bear market for Nasdaq stocks, down 20% from its recent high. So I don't blame you if you're feeling dizzy, confused, terrified about the markets. But in this video, we're going to examine for you why you shouldn't be too fearful. What are the things, nonetheless, that you should know about the uncertainty? Because uncertainty is about unknown, not so much about known unknown. Now, essentially, we also in this video will guide you how you should react in a tariff-fied world versus a terrified world. So as usual, do like our video and subscribe. Yes, ladies and gentlemen, there is blood on the street, as what JP Morgan has said. But the more important thing for you as investors, what we have been teaching in our GCP global investment classes, is that whether it's recession, stagflation, it is basically how are you mentally prepared and how are you able to navigate this downturn that will determine how your wealth will grow. Because, mind you, ladies and gentlemen, many a times we have said that a lower price, whether it's caused by a fear of a recession or a market crash by Donald Trump, is the best defense for an offense in the upside of equities going ahead. So, yes, ladies and gentlemen, there is blood on the streets, but let's look and examine the blood in detail. Now this chart actually is the iShares Semiconductor Index. It's basically typify the sell-off in the market correction and maybe the irrationality. Because if you just look at this month, in the beginning of the month, the index was at 235. Well, right now, as it is on Friday, that's yesterday, it's 157. It's almost 50% down, ladies and gentlemen. And the iShares Semiconductor Index comprises the main components, of course, your Nvidia, your Broadcom, your AMD, which have led the rally previously. So, your question, ladies and gentlemen, is it surprising that it fall that much? The answer is yes or no, depending on basically where are you being stuck with. So essentially, it typifies again the fear, and nonetheless, other the next index actually typifies what it is. Ladies and gentlemen, this is the VIX index. Yes, ladies and gentlemen, we are as of Friday. That's yesterday. The VIX is revisiting the ghost of the last 5 years. That is actually the last time when the VIX hit a high of 45 to 50. That was during the COVID 19 crisis in February 2020. But mind you, ladies and gentlemen, when did the COVID 19 crisis blow away? Well, it took a while, but the stock market recovered in just a month. So, are we going to see this play out again? Well, stick on this video because we're going to examine this for you. Donald Trump termed 2nd of April as Liberation Day. To me, it is Mutilation Day or Miserable Day, ladies and gentlemen. But if anything, let's look at the logic or the illogic of the whole thing. Because on Liberation Day, President Trump presented the various tariffs on various countries. And some of the illogical and the elucidity of the rational becomes very clear. And if anything, it actually presents a clear and present danger of his government to the world. Let's take, for example, the calculation of tariffs. He says that it is calculated, meaning it went through an analytical process. But if, ladies and gentlemen, if you just look, for example, at the blue arrow that indicated on, say, our neighboring country, Indonesia, well, how did he arrive at this calculation? Very simple. He took a 17.9 billion trade deficit with Indonesia between the US, The exports from Indonesia to the US last year was 28 billion. So if you take 17.9 divide by 28 billion, he arrived at 64%. And because he actually congratulate himself that he is kind, he says that the tariff to be applied on Indonesia will be half. That's instead of 64%, it is 32%. Now, if you go through the rest of the other countries like European Union and China, this illogical lucidity or illucidity actually clearly goes through. And guess what? Markets are reacting to that. This is something I find very amusing, ladies and gentlemen, in the markets, having been in the markets for almost 40 years. Now, how does one respond to this illogicality? So you see, ladies and gentlemen, I spent April Fool laughing at Donald Trump's greatest joke, which I think is actually should go down in history as the greatest April Fool's joke, as to basically how tariffs are calculated such crudely, let alone the market reaction to such of this. But if anything, ladies and gentlemen, before and proud to this, if you ask, has market now got greater downside? The answer is obviously yes. Whether we get a recession or not, because in our last class on the 8th of February in GCP Global Investors, we have warned on a few things. One is that earnings estimates basically are likely to go down, particularly on the Magnificent Seven, which have actually enjoyed a tremendous rally in the last 2 years. Secondly, we actually pointed out that the ISM manufacturing numbers, the word uncertainty and tariffs, as well as actually in the Federal Reserve minutes, have actually crop up many, many times, like 39 times in the various minutes, right? So the third thing, ladies and gentlemen, is that the positive sentiments going all the way to our February class was really very high. Right now, we're seeing a reversal of this. So, am I therefore having predicted essentially a correction? But I don't expect a major bear market's gonna be. Now, the bets on the market now, ladies and gentlemen, is that how bad will this bear market be? Will we turn to a bear market, and how should you position if indeed there is a bear market? Should you be prepared if indeed a bear market actually happens? Now, look at this chart, ladies and gentlemen. As of Friday, the S&P is trading at 20 times multiple. In the last 25 years, going all the way back to year 2000, when we had the dot-com bubble, the only two lows that we saw was in 2008 during the global financial crisis, and the valuation was tested again during the COVID 19 low in 2022, and then again retested the second time during the November 20, or rather October 2022 market sell off. So, market at 20 times, the average for the last few lows was at 14 to 15 times. So, if you ask me, has market got downside to go? The answer is yes. The only thing that's really holding it well and is will be answered in the next few weeks, beginning next week, is how will consensus EPS hold up. Now, the whole idea, ladies and gentlemen, when we have been preaching in our GCP global investment classes, is that in reading the US market, it is so much about not so much about valuations or how prices have moved sharply, but reality is in the earnings per share growth. And one of the key things that made Warren Buffett love the US market in the last 125 years, as what we ourselves do, is that consensus EPS for all companies, be it disposable companies, the Magnificent Seven, information technology, consumer cyclicals, as well as consumer discretionary stocks, have continued to post earnings or EPS upgrade year after year. Right now, we are looking at the possibility of a downgrade in EPS going into the first Q numbers, which start to report next week. Now, how severe is the downgrade going to be will then determine how the sell-off is going to be. And that's something we will keep you posted in subsequent videos. So remember to continue to subscribe and tune into our channel. So you may say, ladies and gentlemen, that's very logical. That is now for you to start to feel fearful. But in reality, ladies and gentlemen, at GCP Global Investors, we prepare investors to be fearful when everything is going well. And that's something that we did in our last few classes. For example, we warned about the Magnificent Seven because the return has been unprecedented in the last 2 years going to a February class. Right now, when prices are down almost 20%, it's no longer, it's no longer, time to be disposing of assets, which should have been the case 2 months ago. Right now, it is basically re-looking into your whole investment portfolio and deciding which of the stocks that you should be piling in more, and these are the stocks that will be able to sustain you greater EPS growth as well as being able to generate multifold returns for your wealth going forward. And that's what we will discuss in great detail in our next class in May. So if you reckon that we are the kind of educator for you to help you multiply your wealth, do sign up for our next class and enjoy the early bird special. Till next week then.